partnership. They are buying hella Nvidia chips. They have fired, I forgot what part of their workforce, a big part of their workforce. And I've been looking at their stock. This is when we're going to look at all of these stocks as well. A lot of these stocks were down 20 to 30%. Very good entries. Microsoft also, out of all the Magnificent Seven stocks that are out there, the Mag 7, Microsoft had gotten hit the most, which is why I had been loading up on Microsoft. Some of the weak companies that are out there that I've been telling you guys to stay away from for years. Nike, stop buying it. Just don't do it. Don't do it. All right. Don't fall for the okie doke. Snap. Don't fall for the okie doke. All right. There are some momentum names. We got Palantir. ARM was down big today. It's probably going to be up big tomorrow. We're going to see now. This is what normally happens, guys. When stocks go up big and everybody's putting their foot back on the gas, they're going to go to the high momentum names. All the companies that got hit the hardest are going to be up the most tomorrow. Those are the companies you want to day trade if you are a day trader. Don't counter trend anything tomorrow. You want to buy these things on dips as they're going up. If everything is what I think is going to be, that means we're going
Your belly full? I know mine is.
real early though. Still want you to sit back and not positions till about 9:45, and then I'm going to try to compile a list in the group chat for some companies that haven't started taking off yet. All right. But I'm going to be looking at data center companies, your Palantirs, your ARMs, your CoreWeave. They are going to be up big tomorrow. Okay. The real story today was all eyes at 8 o'clock. We don't have to worry about that anymore. The president has taco in action. That joker said with his chest he was going to blow them to smithereens. And then said, I'm just playing. I'm going to give y'all 2 more weeks. That joker had all of our missiles pointing at them. It was like, I'm just playing. Let them missiles down, guys. I'm just playing. Taco Tuesday. I'm just playing. We're going to give you 2 more weeks. He needed that stock market to go up. I wouldn't be surprised if the government or he told his buddies that this was going to happen. All right, so that all his millionaire friends could make money. All right. If you and look, you can get angry, you can get mad at everything that I'm talking about, but this president, this go round, he don't care. He don't care about insider trading. He don't care about rules, regulations. He's gonna push everything to the limit because that's just what he does. And he's gonna force the government to take him to court or tell him to stop doing things. But he understands that as president, he is immune to everything. He can just pardon himself and all of his buddies. If you had the if you knew that you could pardon any and everything that you did, you would do whatever you wanted to do. It's just simple common sense, guys. You can get angry, you can get mad. He has shown you some of the holes that our government has, and he's playing on it. He's like, look, you gonna give me this power? I'm gonna push the power. I'm gonna show you everything that we need to strength once he gets out of here. This is where we had holes. This is where we had holes. So government, make it stronger so that the next president can't just come in and do whatever the heck they want and make this into a dictatorship. All right. Straight up when you let a gangster into the room, guys, they're gonna be gangster. And you gotta know how to handle a gangster, and we haven't handled a gangster in a minute. Now, the government will be better in the future, but he exposed all of the holes. He exposed every single hole that's possible to expose. That cat exposed it. So we got some work to do. As United States citizens, we have some work to do. I don't believe in either party. I'm just observing and watching. And I'm like, wow, this cat made this into a dictatorship. And he's like, stop me. You can't. Unless you implement other, I don't want to make this political, unless you implement other laws. My dad, if you guys don't know this, my dad's no longer here, but my dad, before he died, he used to always tell me the same. He always say, you know what, son, sometimes you win when you lose, and sometimes you lose when you win. Every situation that's bad, he always told me to learn from it. He says some of his best memories of making better decisions in the future was because of mistakes that he had made. He was like, if I had never made this mistake, I would have never been successful over here. And sometimes success came to me so quickly, I didn't know how to handle it. So just by winning, I actually lost in the future because I felt like, that win was a win when in actuality it was a loss. Now, how do we, you can take this for what it is, but sometimes, guys, when you win, you actually lose, and when you lose, you actually win. The key point is that, are you going to be better? Are you going to learn from that? Your best loss, guys, is your first loss when you're trading and investing. When you start trading and investing, guys, and you have to take that first stop loss, that first stop loss is usually the best loss. Think about it. There have been times that you guys are like, I wish I need to sell this. And what do you guys do? Nah, I'm just going to hold it for a couple of more minutes. I'm just gonna hold it, and then it turns into, I'm gonna hold it for a couple of more days, and then you're like, oh, I'm gonna hold it for a couple of more weeks, couple of more months, couple of more years, all because you don't want to take a loss. Just take the loss. Usually your first loss is your best loss. All right. In this particular game, when you learn how to lose, that's when you start making a killing in this game. When you learn how to lose, you're going to earn more because you're gonna understand. Hey, thank you. Who just sent me that? Thank you for the galaxy. I appreciate that, Miss Treetop. Thank you. All right, so oil spikes. There were oil spikes. The Fed stocks can move. A relief rally is not only possible, it looks like it's about to happen. The market has been down for 5, 6, 7 weeks, guys. We need a 2-week move to the upside where we all know the direction. We all know the direction for the next 2 weeks, but it will determine what happens tomorrow. Well, it's not all determining for tomorrow, but if we close on the highs tomorrow, there's a very, very high chance that we run for the next 14 days. All right. What was weak? Retail and industrials. There was unusual options activity on NVIDIA, Palantir, and AMD, and puts on Nike, of course. All right, trader takeaway. Nobody wanted heavy positions before 8 p.m. You remember how we looked at the market today, guys, and I kept saying, dang, the ATR, when we looked at the different stocks, they didn't go their full ATR. That's because nobody wanted to trade in front of this. So it makes sense that stocks weren't moving their normal moves because Caps was like, I ain't trading today. I'm going to wait and see what Trump does, and then maybe I'll trade tomorrow. All right. So the market was kind of soft today, even though there was some big moves. All right. So the market was confused, but now that we have information, at least for the next 2 weeks, you guys should be trading smart, staying consistent, and remember, $100 a day keeps the bills away. All right, so let's get to some of you guys' stocks. All right. I remember we were supposed to talk about snow. So what is snow? Let's talk about snow. What is Snowflake? Snowflake is the actual name of the company. So what is Snowflake? The stock? All right. So for you guys that don't know, Snowflake, and I'm using ChatGPT. Now, guys, I'm gonna be honest with you. When it comes to stocks and information for the day, Chat is actually pretty good because it's pulling its information from a bunch of data sources that, like, Yahoo Finance, Google Finance. It's pulling information and live feeds. However, if you ask it something live like, hey, are the astronauts about to enter orbit? ChatGPT is the absolute worst when it comes to live news. Don't use it. Don't even ask it. Unless it's happened 7 days ago, ChatGPT sucks. If you want live information, use Claude. Or maybe even Gemini. I don't know. I haven't really been on Gemini or Perplexity. But for live news, I go to Claude. For anything outside of that, I use ChatGPT. All right, just being honest with you guys. Now, Snowflake is $149 a share. In the last year, guys, Snowflake was up 11.78%. It's up 3% in after hours. So if Snowflake is up 3%, guys, all the software companies gonna be up tomorrow. All of them. So my Microsoft should be running tomorrow. The market cap, for you guys that don't know, the market cap of Snowflake is right around $100 billion. That means it's entering adulthood. It's a young adult. When you reach $100 billion in market cap, I want you guys to think of this company as being a 21-year-old that just graduated from college. Okay? That's where this company is. It's now about to go in its money-making stages. All right? Can this company at some point in the future reach $1 trillion market cap? Yeah, it's realistic. I don't know if it's going to happen. But as long as these other companies are growing in market cap, whatever you invest today, you probably can make anywhere from 5 to 10 times your money, maybe in the next 10 to 20 years. Now, I know that doesn't seem that big to you. Well, you should have been buying Snowflake when it was a lot smaller. It's bigger now. It's a young adult. If you want to make fortunes on a company with the least amount of money possible, like $1,000 to $1 million, you guys got to catch these companies when they're 10 billion in size or 1 billion, 1 to 10 billion in size, so that when they get to $1 trillion, you can take a $1,000 investment or a $10,000 investment to $1 million. It's not going to happen, guys, when these companies are already $1 trillion, unless they go to 100 trillion, which I just don't think is gonna happen unless we go into the printing press and just start printing away. So what is Snowflake? Snowflake is a cloud data company. Think of it as the data warehouse of the internet. Companies store massive amounts of data. Let me turn this down because I know you guys, it's kind of loud. Hold on. Unless it wasn't bothering y'all. If it was bothering, it was bothering me. If it wasn't bothering y'all, I'll turn it back up. All right. But again, let's go back. Snowflake is a cloud data company. Think of it as the data warehouse of the internet. Companies store massive amounts of data, sales, customers, AI data, and Snowflake lets them store it, analyze it, and share it across teams. The big deal is that it works across AWS, which is Amazon, Azure, and Google Cloud. It's heavily tied into AI and big data growth. It's used by large enterprises to run analytics and machine learning, all right? In plain English, Snowflake helps companies turn raw data into decisions and money. Around $90 billion. That makes it a large cap company, but it's a young large cap company. There is still money to be made. It's $100 billion. This company can easily grow to 300 or 500 billion, guys, and still be under the radar and not be a household name. That's like 5 times your money. Even if you were earning 20% a year and you were able to get, a 5x, that's decent. That's averaging, if you can get a 5x in 10 years, that is wild. That's like 100% return a year on average. You invest something like 10 grand, maybe it be worth 50 grand, in the next 4 to 5 years. If it can get to $1 trillion, that $10,000 investment can get to $100,000. So, you can add a zero behind it if it goes from 100 billion to 1 trillion. But thinking it's going to go from 1 trillion to 10 trillion is not a realistic view, at least at this point. They're going to have to change some of the things that they're doing if they want to be valued the way NVIDIA and Microsoft and Apple and Google are being valued. Those are the leaders. Unless you're involved in data centers and semiconductors and everything that investors on Wall Street loves, then chances are your market cap is not going to get to where theirs are at this point quickly. It might get there over the years once they become bigger, and then they can pour money into these companies. But thinking that it's going to overtake those companies is simply not realistic. NVIDIA coming from where it came from to become the leader is unusual. It's unusual to see a company do what NVIDIA was doing. And in fact, everybody could see it happening back in 2016 and 2017. In fact, I was even telling everyone, guys, I know this company isn't a household name at this point, but they are involved in everything that's tech, and nobody can compete with them. I was hearing this from leaders like Elon. I was hearing it from my son that was playing video games. He was like, yo, there is nothing like a system that's running on NVIDIA chips. I was hearing, computer programmers talk about it, how it's, you had your driverless vehicle community talking about it. NVIDIA chips and I think AMD chips were the only chips being used in cryptocurrency. I was like, what don't they do? They was involved in everything that was speculative. So it didn't matter if one speculative group dropped and another one rose. As long as technology was going up, NVIDIA was going to be the leader. And now they're so involved with everything that's out there, it's going to take a long time to supplant them from their top position because they're involved in everything. They're invested in everything. So even if their competitors grow, they're making money with them. All right. But yeah, their graphic cards are bananas. All right. So, but Snowflake and companies like Snowflake are like, I don't want to say anti-AI, but AI is trying to take all of their jobs. Anything that's software related, these companies are getting pummeled. All right. So be extremely careful. All right. All right, so that was Snowflake. I always talk about One Stop while we're doing these lives just so that you guys can at least get educated on a stock every day. I'm not going to do this for every stock, but it's very important. All right. Let's look at AVGO. What is AVGO? That's Broadcom. We're going to look at Broadcom. A lot of you guys didn't even know how big Broadcom is in the semiconductor space. Guys, nobody cares. Well, today Intel got its chain, and now it's part of the same crew that Broadcom and Nvidia are. They're trying to bring in this. They're trying to bring this OG into the game. So Intel got its chain. Might be able to start looking at Intel again, because Intel had gotten old and it was out of the game, and we was like, OG, Unc, you know, we respect you, but you need to go retire somewhere. And Intel was like, nah, I still got some, you know, in the tank. I still got some in the tank. So the only reason, I'm gonna be honest with you guys, the only reason Intel is even getting looked at right now is because the Intel CEO and guess what? The Nvidia CEO work together. So because Jensen Huang, the Nvidia CEO, and the Intel CEO are close like this, then you might start seeing Intel get a little bit of pop. But for a long time, Cass was like, man, you need to take your old butt home. Like, get out of here. This is a new world. This is past your prime. Like, get out of here. Intel was like, look, Nvidia is my friend. Broadcom, if you guys don't know about Broadcom, the reason why Broadcom even blew up, guys, is because it was giving semiconductor chips to Apple. This is what Apple was using for years, and nobody knew it, right? They were providing all of the semiconductors on the rise, on Apple's rise to the top. They were using Broadcom's chips. So if you were investing in Broadcom and investing in Apple, you were doing extremely well. The 200-day moving average is angled up, which is cool. But just like every other stock, we were underwater. And now if we can get above water, guys, finally, I think tomorrow we're going to get above water. Tomorrow's going to be Wednesday. That's also perfect. If we can have an up day on Wednesday, an up day on Thursday, an up day on Friday, that's going to give us the 3 days we need to get above this average and start a new trend. Now, it might be a short-term trend, which is 10 to 14 days, but it should give us the push that it needs to at least try to get, into this 350 range. So what I like to do is I like to look for unusual options activity. Earlier today, chat just told us that there was unusual options activity in Broadcom. So to find unusual options activity, guys, you guys got to come up here to where it says all products, and you're going to look for volume. You're going to look for volume. And what you're going to do is you're going to look for unusual numbers. I'm going to show you guys an example of unusual numbers. Watch this. So this is Broadcom, and we do this every session. We look up unusual options activity. I'm trying to teach you guys how to do this on your own. But we're gonna scan, and you can create. So agentic AI, guys, are agents that are on whatever platform that you're using. You don't have to go in there and say, hey, can you tell the agentic AI to come here because I need to teach it something. Your agentic AI is always listening. So when you decide to get a chat GPT or whenever you decide to get a GPT to use, and I hope you guys are using GPTs, If you're still using regular Google search, that's like using dial-up. That's just like using. You remember when navigation first came out? Now I'm a realtor, so when navigation first came out, I had to carry this big old Garmin. It was about this big, and you put it on your dashboard, and it was so big that it couldn't even hold. There weren't even stands that can hold it. So when you would make right and left turns, you would have to grab the Garmin as you go left and right, so it won't fall off the dashboard. And a lot of you guys would use the Garmins. Like I saw somebody using a Garmin the other day, and it's just like you guys using. For you guys that don't use GPT, it's why everybody else is using navigation on their phone or in their car. You are behind. Now, I'm going to show you guys unusual options activities. So we're going to look at this first box. So when you're looking up options, not to confuse anybody, the very first thing we want to look for is down my chin. You're going to see something that says volume. What is the largest number that you see in this first box? In this first box, April the 10th, what's the largest number that you guys see? Now, I don't really see anything unusual, but just tell me the biggest number that you see. Yeah, 46, 48. There's a 42 there too. So the 40, what I usually do, guys, is the 48 and the 46 are the largest numbers, but I also see that 4,200 sticking out. And the reason why that 4,200 is sticking out is because that 4,200 is a 350 strike. Y'all see that? We're not at 350 right now. What price do you see right here? Write down what price is Broadcom at right now. It's at 333, right? But I see a whole bunch of volume being bought at the 350 strike. Yep. So what I also like to do is I say, you know what? Let me go all the way out to the next week, April the 13th. Do you guys see any unusual options activity the next week? What's the largest number that you guys see? What's the largest number? 1472, right? Now, so we noticed that the 4,200, we noticed that the 4,200 was at the 350 strike. So then we looked up the 1,400, and I want to know what strike that's at. Guess what? It's at the $365 strike. What? 365? Word? We're only at 333. That's $30 higher. That's a 10% move. That's the strike I would be buying tomorrow. So I would write that down, guys. I don't even need to go and check the strike that I'm going to day trade. I'm going to trade that strike, period. And if I'm intraday trading, I'm going to get in and out the same day. That's the Millionaire Challenge trade. All right. So, you know, I always check it out just to see. It doesn't mean that it's going to pay out. It's just something that I want to look for. All right. So I also go back to my charts and I say, well, where the heck is 365 on this chart? So I'm like, dang, 365 is way up here. That means we might go up, overshoot it. We might get candles that look like this. We might overshoot that bad boy. maybe come back, maybe go higher. I don't know. You might get a move like that over the next couple of days, maybe next couple of weeks. Okay? Or you might get a move that's you might get a move that does this. Go to 354 tomorrow. Close on the highs. The next day it might go lower. And then you might get this move. It might take 1 day, 2 days, 3 days, 4. Hit 365. And that would still be on this channel that's forming right here. And it still might look like this. That is still realistic. That's realistic. And not only is that realistic, I don't even know if you guys know what I just drew. I just drew a upside down head and shoulders. For you guys that got your trading, I think Shaq Bully just got his trading book, his Steve Neeson's day trading strategies or trading strategies. You're going to see this pattern you're going to see that pattern. An upside down head and shoulders pattern is one of the most bullish patterns you can find. Now, a regular head and shoulders pattern is one of the worst things you want to see on a chart. But an upside down head and shoulders pattern, a upside down head and shoulders pattern is one of the most bullish patterns you can find on a chart. Look at the week chart. The week chart, look at what's starting to happen. And this happened before we got the news. You're about to get another, well, I guess this still will be the same week. I don't want too big of a move. Now, I know we getting all bulled up, guys, but we don't know what the market's going to do. If we close at the lows tomorrow, you can cancel everything. You can cancel all your options. You can cancel them. If we close on the lows tomorrow, it's a wrappy wrap. That means Wall Street is not impressed. Wall Street is like, we are already positioned for the market to go down. So we actually added on to our shorts. If we close on the lows tomorrow, that's it. We going down. It's a wrap. Tomorrow is going to be interesting because we're going to gap up. You want the market to close halfway to the highs. If we close anywhere lower than half, we might be in trouble. So tomorrow is going to be interesting. There's going to be fireworks from 2. Tomorrow is going to be more interesting from 2 to 4 than 9:30 to 12. 9:30 to 12, a lot of money is going to be lost. I don't know in what direction. It might be a fake out to the downside, back up. It might be a fake to the upside, back to the downside, back to the upside. But the true move tomorrow is going to be from 2 to 4. That's going to give us an idea of what this market is thinking. So 9 to 12, popcorn. I advise you guys don't trade. Don't trade. It's going to be too volatile for you guys. Just watch. Buy things that maybe you were interested in buying. Get out of things that may have been on the things that you have been thinking about buying or getting out of. You're going to get a nice little pop tomorrow. Maybe you can get out of it. But I don't want to encourage any day trading tomorrow unless you are an advanced trader. All right, sit back and watch and learn because it's going to be wild tomorrow. Wild. But 2 to 4 4 is going to be the move. 2 to 4 tomorrow is going to be the move. So if you're interested in Broadcom, guys, Broadcom is down. Broadcom is down. It hit a high of $414. If you were to add this to your portfolio, guys, this is like adding Apple. This is like the Apple of the semiconductor space. I don't want to say you can't go wrong. I'm just saying it's the Apple. It's like if you had to pick the Mag 5 or 7 semiconductors, this would be one of them. It's one of the leaders. It's one of the top 5. You got your Taiwan Semiconductor. You got Broadcom. You got NVIDIA. AMD be playing. I don't know what AMD want to do. You got AMD, and no, I'm not adding Intel to this equation. Intel makeup, but I'm not quite sold on it yet. Micron, you can add Micron to the crew too. Please do not say Supermicro. Supermicro is the I'm trying to think of who would Supermicro be, guys. What's an analogy for Supermicro in the semiconductor space? I don't know. Supermicro, You said Enron? I don't know yet. Look, you're not, until you're proven guilty. But yeah, they do have some Enron type things going on. That's hilarious. I wasn't even thinking on that level. But yeah, I would stay away from Supermicro. That's hilarious. We are breaking this thing, but Broadcom has dropped from 414 to 333. So guys, Broadcom is down 20% where we are right now. If you're thinking about buying a semiconductor company and you're like, I don't have any in my portfolio, this is a great one to add. It's just a solid company. Now it's gonna move. Remember, it's down 20% right now. Even if you bought NVIDIA is down. Like, these companies move 20, it can go down 50%. But when it goes up, people pile in to this company. And because they're heavily invested in data centers, you're good. When they jump on the data center AI bandwagon, these are one of the companies that are gonna benefit from it. So add it to that portfolio. This should be a household name that nobody knows about. Should be a household name that no one knows about. Now, if you're interested, if you're like, Joel, these semiconductors just move too much, you can buy the semiconductor index. This semiconductor index, I'm not sure how many companies, let me ask ChatGPT. I don't know how many companies make up the SMH. Let me ask, how many companies make up the SMH semiconductor index? All right, how many companies make up the SMH? Okay, the SMH is made up of 26 of the top semiconductor companies. So Micron, NVIDIA, Broadcom, they're all part of this SMH. And guys, the SMH moves. This bad boy moves. This bad boy moves like a stock. This is probably one of the most exciting indexes that's out there that a lot of you guys don't know about. Now, when it goes down, it goes down. When it goes up, I'm going to show you guys how much this bad boy goes up. If you were to buy this, let's say you were using my method and you were using the What Would Joel Do method. And for you guys that don't know what the What Would Joel Do method is, I talk about it every night. So the What Would Joel Do method, has what we call I use the BTG system, right? So the What Would Joel Do method, I use the BTG system. I also created the BTG system. All right, the BTG system says that I need a bias. The bias is going to be this 200-day moving average. So I need a bias. The bias is this 200-day moving average. All right. If that 200-day moving average is angled up, it's going to increase my luck. So I'm only going to buy dips. Now, this RSI is a trigger for me. So T is a trigger. What are the triggers that's going to make me buy? I don't necessarily need this RSI to go oversold, but when I find something that's oversold that everybody is buying, and we're talking about the semiconductor chips, I got to take a shot at it. All right. So if we go oversold and we hit, if the bias is the 200-day moving average and it hits that bias, and the bias is usually a moving average on all of my charts. When you break my trigger, when you break this trend, the trend is this trend line. This is a trend line right here that all of you guys can draw. All right, every single person that's here should be able to draw this line right here. It's one single line. It's like a sword. It's just a line. When you draw that and it hits the trend line and it breaks through it, the What Would Joe Do method says you need to have a trending indicator on your platform. You need one trending indicator. Now, the two best trending indicators on the planet, the best trending indicators on the planet are going to be the TTM trend or the Heikin Aiki candles. The two best, in my opinion. Okay? My opinion. I don't know how much weight my opinion gives, but hey. These are the two best in my opinion, the TTM trend or the Heikin Aiki candles. So if you use my system, which is the bias trigger goal, I have my bias, my trigger is when we break that trend. You have to hit a moving average first. When you break that trend, if your trending indicator is on your platform, when you see your trending indicator go green, 3 candles, you can take a shot at it. And if you had done that, you would have caught all of this move. Now, I'm going to show you guys how much the SMH moved. It hit the 200-week moving average April the 7th last year. Remember the tariffs when all of you guys were scared? You should have been buying. We went down to the yellow brick road. Once we hit the yellow brick road, which is my bias, I didn't necessarily think, now I bought, like, don't get me wrong, when the volatility index was above 50, I was buying just because the volatility index was above 50. But if you weren't sold on that, you could have waited, used the What Would Joe Do method, and once we broke through this trend, this is weeks, guys. When we hit the 200-week moving average, you could have got in 7 weeks later. That's 2 whole months. You had 2 months to get into this. Now, I know you guys are busy, but you ain't that busy. You ain't that busy that you couldn't have pulled up a chart in 60 days. Maybe do it once a week. Once a week, pull up a chart. Maybe it's Sunday chart day. Sunday chart day. I'll become a super fan with Joel, because he does a super fan live every Sunday. That's the days I'm going to pull up my chart. Right before church or right after church. Once you break that trend and it starts to go up in price, guys, look at how much this index went up. At its highs, do y'all know in less than a year, this index, I ain't talking about a stock. Guys, the index, the INDEX, guys, this index was up. You ain't gonna believe this number. The index, y'all know how the S&P be up 28%, the NASDAQ be up like 32. The SMH was up 81%. As of March, in less than a year, it rose 81%. What? This bad boy was moving like a stock. Look, y'all don't need to see nothing but this. 81%. That is absolutely bonkers. Now, a lot of people say, bump that, Joel. If I can get an 81% move, why do I need to own NVIDIA or Broadcom or Micron or whatever? And I'm like, why do you? That's crazy. You don't. I've been considering it myself. I was like, why am I buying all these semiconductor companies? Shoot. Now, well, let's see how much it's down. So we hit a high of $427. We hit a high of $427. We hit a swing low of $357. When it hit this swing low, what I usually do when things move that big, that much, 80% in a year, that means it can possibly drop half of that. So when things move 80%, it can drop 20, even 40%, guys. So be careful. I'm not going to buy it. If it can move 80%, I need it to come down at least 20%. 20% minimum. Y'all know me, I ain't buying nothing unless it's got 20% equity in it. I come from a real estate background, and it's just very hard for me to buy anything unless it's got 20% equity in it. As an investor, I would lose clients if I didn't find them property with at least 20% equity in it. They were like, you can't do it, I'll find somebody who can. So it's just ingrained in my head to buy things 20% down. Now, when this was down, guys, at the 357 area, it was actually down about 16%. It's not down 16% anymore. The SMH, just in the last week, guys, just in the last week, the SMH has moved from 357 to where we are now, and it's probably going to be higher tomorrow. Guys, the SMH in the last 2 weeks is up 12%. Y'all know how crazy that is? 12%? This is what y'all need to be buying options on. If you can afford it, because when it moves, it moves. It moves. If I was to swing down to a more recent chart, like a 200-day chart, same thing. How do you trade something like this? Why does my charts look cleaner than y'all's charts? Because although this looks choppy, I know this looks like choppy jalopy, right? This looks like choppy jalopy, but it really isn't. It really isn't that I mean, it's choppy, but it's tradable if you know what to look for. Right? You could see that it was ranging. And what you needed it to do is you needed it to break out of this range. Or you knew where to buy it, where to get out, where to buy it, where to get out. Once it broke out, and it spent 3 days, 3 days out of this range. All you needed was 3 days, guys. If it can sit 3 days out of this range, it might have a chance to go up. Look at that. It just broke out of its range. And now it's probably going to start forming another range. You see, it started ranging here too. When it broke out of its range, what sucks is that it broke out of this range, 3 candles, and then it started to go down in price. I can see why people lost money here. Broke back into the range, Wow, that was a big move, and I can see why. Well, it started to go higher. You can also do the same thing. All you need to do is learn how to draw these trend lines. If you break out of this, if you break this trend, guys, and you get about 1-2 candles, look at these moves to the upside. Even here, when you broke out of the range, I guess you can call that a loss. One loss, but it kept winning. It broke out of this range. It broke out of this range. It went down. Then it broke out of the range again. Then it broke out. And look at this. All you had to do is just keep drawing a white line. Every time we broke, we went higher. Went higher. Went higher. And these are days. These are like 10 range. Broke out of its range, went up for about 2 weeks. Broke out of its range. 3, 4, 5, 6, 7, 8, 9, about 10 candles. That's the 10 candle system that I teach. Those are 10 days. Then it started to go down in value. So I don't know what we see right here. If I was day trading this, I'm sorry, if I was swing trading this is what I see. I see a range forming. It needs to break out of this range, and it needs to get out of this range for 3 days. Even when it broke, oh dang, even when it looked like it was gonna break to the downside, it wouldn't hold because it can't break out of this range. This one candle that broke down here, you needed 3 days underneath out of this range. We need 3 days out of this range to get to these highs that are way up here. Now, I don't like taking trades into all-time highs. I just don't like doing it. You guys can do it. I ain't gonna do it. If we break out of this range, even if we spend a bunch of days, let's say we break out of this range and we do something like this, right? And it's trying to go to its highs. I'm just not gonna do it. There's room for it to happen. It's just, I'm just not gonna do it. I want it to really, I like it when it's way down here. I like to swing trade guys near moving averages. This is where I like to trade. This is where Joel trades. I'm gonna trade way down here, wait until we hit a moving average, and then break out of that range and get about 3 candles. This is the what would Joe do method right here, except one thing I don't like about this is that it's not green or blue down on your bottom chart, which is your TTM squeeze. Why can't I pull this up? Why can't I pull this up? Here we go. See how all of this is red? I don't like that. I need it to be blue. All of this is red while I'm trying to get in. I don't like that. I want it to go blue, like this, right here. So right around maybe the 4th day, I would have been reluctant to get in because, you know, I like to get in within the first 3 candles. I really don't like getting in on the 4th or 5th. But, you know, you could take a shot. You are going from a down 200-day moving average to an up 200-day moving average. Once it started to angle up, that increases your luck. That means I can just take trades to the upside. All day, every day, all day, every day, all day, every day, until we go into a downtrend. It looked like we were about to, but we started to go sideways, and now the 200-day done caught up. We dang near at the 200-day again. We got close, guys. We got down to 360. The 200-day moving average was at 345. All right. All right, that was SMH. Don't want to confuse you investors, you newbies that are coming in. All right, let's look at UNH. Y'all all about UNH. I was on the UNH bandwagon too. I ain't effing with this stock no more. It ain't do what I wanted it to do when I wanted it to do it, so I'm out. Y'all know how I be getting. Fool me once, shame on me. I'm like President Bush. You can't fool me but one or two times. All right. So 200-day angle down, I don't want to be around. 200-day angle down, I tried it with you guys. I should have just kept to my strategy. 200 days angle down, Joel don't want to be around. Look at this, 200 week angle down, Joel don't want to be around. I don't care. I care about you guys making money. I don't care about this stock no more. It can fall in a hole. Anytime I lose money on a company, I won't trade it for years. It can fall in a hole. All right. Y'all can make money. Congratulations. It's your baggage now. I ain't getting fooled again. All right, but it's going up in price. All right. I caught a little move like that too. They always get you with that little 9% day, then it go down 20%. UNH, guys, is still the number one insurance company in its industry. It's still number one. If you're going to go with a leader, go with this leader. If you're going to go with a leader, go with the leader, right? They also had some accounting issues also. I don't really want to mess with companies that have issues with accounting. Wall Street doesn't like it either. They don't like accounting issues. That's why SMCI is getting pummeled. All right? Because no one wants to be involved in an Enron type situation. Now, if you don't know what company this is the company where the CEO was murdered by the Italian guy, Maggioni, I believe his name is, right? So I took a shot at the company. I mean, I'm not even trying to be funny by saying I took a shot at it, but I took a shot at this company because the CEO getting killed shouldn't affect the operations of the company. He was cool in the industry, but he wasn't like a Jensen Huang or a Steve Jobs or a Elon Musk, right? Like that superstar of the company where if he goes, the whole company goes. So I took a shot at it when it dropped, and it didn't bounce. And then I think weeks later, they were like, there's accounting issues. So I tried to stay with it. I got out of it. Then I came back. They had some great earnings like 3 or 6 months ago. And the company just can't bounce. It can't bounce to the upside. Now, this might be the move that it needs. In fact, when you look at the relative strength index, the relative strength index is it was going bonkers last May and July. And that was after, I guess April, it started to go down. So it fell just like everything else. So the RSI started to go off for oversold. So that was a great time to buy it. But from July all the way into March, guys, stocks went bananas. After the tariffs, stocks went absolutely crazy to the upside, and this stock didn't. So that told me that why isn't this stock, why isn't it going up with everybody else? There's obviously something going on with the company where Wall Street is like, I'll take a pass. So I held on as long as I could. And y'all know me, I don't like seeing eyesores in my portfolio, so I eventually sold it. Now, outside of how I feel about the company, let's analyze it. Okay? So last year, it did go oversold on the relative strength index. And when companies like this go oversold on the week chart, you have a very, very high chance that 1 year later, the company is higher. Well, the company is higher than it was a year ago. Well, we're not quite at April, well, I think that was April the 7th. And what's today's date? I guess it has been a year, right? So it is up year over year. It's just only up like, let me see, if you bought it somewhere around in this range, I mean, you're only up about 6% year over year. So I'm not in this game so I'm not 95 years old. I'm not in this game to earn 5 or 6% a year. I need some gains. I'm looking for 80. I'm looking for 200. I'm looking for 10Xers. I'm still young. Still got some in the Oh, I don't, that's not impressive to me. If you can't move over the last year, then you got to move without me. So it is up. It is forming what we call a base. A base is when it goes sideways and it can't go lower than a certain price. So it looks like it's forming a base between $300 and $277. So if you're interested in this stock, put in, if you buy it at these particular levels, you can say, you know what, if I buy it here, I can put a stop maybe somewhere in the 250 range, And if it loses $50, 50, 1/6 of that, it might be down 15 or 16%. So if you can stomach a 15 or 16% drop, waiting for this to move in the next 4, 5, 6, 7 years, then take a shot at UNH. Now, I don't know if UNH offers a dividend. So we're going to pull up UNH. We're going to pull up UNH because this is a popular one that you guys are talking about. So I'm going to pull up UNH on a platform. I'm going to pull up UNH on Yahoo Finance. So we're going to switch charts real quick, and we're going to pull up UNH on Yahoo Finance. Let me change it out for you guys so that you can see it. So we're going to look at UNH on this chart. Why is it saying Apple? Did it change? There we go. All right, so UNH, if you bought this 1 year ago, in fact, guys, 1 year ago, if you bought this, it actually says here that it's down 41%. So if you bought UNH 1 year ago, you're down 41%. I ain't trying to lose 41%. I didn't work too hard to be dealing with no company that can possibly drop that much from my entry. Doesn't mean that I'm about to drop another 41%. Last 5 years, I would have been down 15%. So if you held this stock for 5 years, you're losing money. You better offer a huge dividend. So UNH does offer a 3% dividend. I don't think you guys are going to be able to see it, or if you squint your eyes, but it's right down here. If you look at the information under the chart, it does say forward dividend and yield. That number says $8.84, which works out to be 3%. 3% is not going to do it for me. Now, I know a lot of you guys that are retired right now and you're sitting on millions. You might want to put you might have millions in one of the $10 million you have. You're like, I'm going to live off of the dividend that I put in UNH. You put up $1 million. You're going to get paid out $33,000 or $31,000. Okay? because it offers a 3% dividend. No matter what the stock is doing, it's offering a 3% dividend. If they're giving you $31,000, because that's what that equates to, because what? 10% of a million would be $100,000. So 3.14% would be 31,000. Now you're not going to get 31,000 every 3 months. That $31,000 is going to be spread out over 4 quarters, and you're going to get 1/4 of that $30,000. So if you cut 30 in half, that's 15. You're going to get about $7,500 every 3 months. Okay? I know a lot of people that do that. They'll just use the $7,500. That pays for whatever car that they have, or it might pay for medical bills. I don't know. When I get 95 years old and I start putting $1 million into companies like UNH, I'll know how to do it too. All right. In all honesty, I would have just put it in a CD. Guys, there's CDs paying out 3 to 4%. Why am I putting in this terrible company? Well, move that it can make to the upside. I still got my eyes on the prize. I get it. It can go up in price to where it used to be. In fact, guys, if UNH ever went back to the price that it came from, if UNH ever rose back to the price that it came from, you would earn hold on. Why won't this go away? There we go. If we were to ever go back to the price that we came from, and you have a 90% chance, there's a 90% chance that a stock will see its all-time high again. Now, I don't know the statistics on the average of when it will see its all-time highs again, but you got a 90% chance that this stock will reach its all-time high. So if you were to get in right now in the 307 range, and let's say it rose all the way back to where it came from, guys, you would make 100% return. That means if I had $1 million invested in this company, I might be able to earn another $1 million off of that, and that's not including my 3% dividend that I'm getting. So I see why people are doing it. I just am like, I'm good. I'm good. I'm good. You do have it is forming a base. You really do only have about 15% risk to make 100% return. Guys, that's a pretty decent risk to reward. You're risking 15%. You're risking 15% to make 100% or more. That's a hell of a return. In fact, I'm second guessing myself right now. Nah, I ain't about to get duped. Bump that. Fool me once, fool me twice. I'm not getting fooled again. Yeah, you're risking 15%. And it's formed that base over a year. That's what you want to see. You want to see companies form a 1-year base. I'm not going to be angry at anyone that takes this investment. It looks like it's double bottoming. It got oversold last April, so it actually, when you see an oversold condition on the relative strength index, Wall Street loves that. They're like, yo, that's like butter. 300 oversold. Great. Everybody that was gonna sell is probably out of it. Now you just need a catalyst for this company to go back up in price. You need a catalyst for this company to go back up in price. But they're gonna make money without Joel. Peace out, homie. All right, this is Arista Networks. I own this company. This is one of my favorite data center plays. I own it and I keep buying more of it. This is one of my data center plays. Okay? It's also forming a base that started in November. So November, December, January, February, March, April. You got a 6-month base that's forming. Great. That's what I like to see. If it breaks this, guys, it can go down from 133 to 76. Now the risk to reward is going to be kind of high. I am risking 40%, but I'm not thinking about so hear me out when I tell you guys this. The risk is 40% if it ever dropped down here to its 200-week moving average. And yes, if it ever went back to its all-time highs, you're gonna grow about 22%. So the risk to reward back to its all-time highs might not seem why I'm buying it. I'm buying this company because it has growth potential. If this company gets back to its highs, it's probably going higher. Why? People say why? Because think of what they do. Let's pull up, let's go on to ChatGPT. I'm going to explain what Arista Networks does and why I own it. What is Arista Networks? All right, let me change the charts again. So, Arista Networks. All right, Arista Networks up 4% in after hours after being up 5%. Guys, it was up 6% and then it's up another 4% in after hours. Your boy is having a great 24 hours. Drinks are on me. You know I don't drink no more. Y'all know that? We stopped drinking probably about 2 years ago. It'll be 3 years, I think, this September. So yeah, we're that couple that drinks the 0%. Y'all come over, we're like, you want a glass of wine? And we pour you a glass of red wine. And you're like, man, I done had 3 glasses. How come I ain't feeling no buzz? It tastes good, but why am I not getting a buzz? We're like, oh, that's 0%. 0%. We're that couple. All right. So, Arista Networks, for you guys that don't know, is $183 billion in size. I love that. Yes, it's a large cap company, still has room to grow. You know, I'm looking at $1 trillion. Once these companies get to that 100 to 200 mark, oh, best believe they're thinking we can get to 500 billion or $1 trillion. We're not yet finished yet. Even if this company got to be $1 trillion company, it will still be only 1/4 the size of NVIDIA. So what is Arista Networks? Arista Networks is a high-end networking company that builds the infrastructure that connects data centers together. Remember, data centers, guys, is the key word for this year and for any investment opportunity for the next 5 years. At least this year, it's one of the key words that we're looking for. So companies that are involved in data centers, when we have up days or up markets, these companies are going to move the most. They make ultra-fast switches plus networking gear. They're used in cloud data centers, AI clusters, and big tech infrastructure. In plain English, if NVIDIA builds the AI chips, Arista connects everything so that AI can actually work together. Here's what's important. Why is Arista important? This is the edge. Arista sits right smack dab in the middle of the AI explosion. Who are their customers? Microsoft. That's all I needed to hear. If one of the top 5 companies in the world are your customers, it's like owning Broadcom, with Apple. It's like owning CoreWeave with NVIDIA. CoreWeave is not only a customer, NVIDIA is not only a customer, they're an investor in that company. So you got Microsoft and Meta, big cloud providers. These companies are spending billions on AI infrastructure. And guess what they need? Faster networking to move all the data. So why do people buy Arista Networks? AI infrastructure play, not just chips. I know we talk about chips all the time, but you guys got to start diversifying into networks or all the picks and shovels, about the picks and shovels. They say, back in the day when there was a big gold rush in San Francisco, in California, it wasn't the gold that made everybody money. It was the picks and shovels. Well, that's what these companies are. They're the picks and the shovels of AI. There is massive data growth. AI requires huge data sets, real-time processing, faster connections. Arista benefits every time data demand increases. Strong financials, less crowded trade. They're not as hype as NVIDIA. That gives them exposure to AI without chasing the obvious names. All right, so just know that, guys. Arista is smack dab in the middle, and they're one of the leaders. They're $180 billion in size. When data centers really kick off the way everybody thinks they're going to kick off, this, in my opinion, might easily be $1 trillion company. Companies like Broadcom snuck into the $1 trillion club. Did y'all know that Broadcom is $1 trillion? Well, I don't know if it's $1 trillion anymore. They snuck into the $1 trillion club and nobody even knew who they were. They were like, how you get in here? They're like, cause we worth $1 trillion. We worth $1 trillion, just like you. They're like, word? And then Apple comes along like, yeah, that's my buddy Broadcom. That's what NVIDIA is doing. This is what all these companies are doing. This is our buddy Arista Networks. We know it's not a household name, but they're gonna grow because we grow. Okay? So, one of my favorite companies that I've been buying. Y'all wanna know what I'm buying? This is what I'm buying. Y'all wanna know what Joel's buying? So when I show my receipt, I don't want y'all to be talking about, why didn't you tell us you was buying Arista Networks? Joel, you be keeping all the secrets. You just show up with your receipts. You don't never show us how you got it. I done went through a whole ChatGPT 30-minute education on this company, and somebody gonna come in here that was on here today and be like, you ain't never mentioned Arista Networks. Joel, I promise you. You know when people be talking, they'll look you dead in your eye. I promise you, you didn't teach it to me. I promise. Like, what you promising me? How you gonna tell me what I did? Anyway, Arista Networks. All right, let's look at another one. Let's get through a lot of these because it's 8:30. I got to get out of here. We have CoreWeave. Let's just look at their chart real quick. I'm not going to go into what these companies do because I don't have the time, but we will look at the chart. CoreWeave is one. Let me pull this up over here. There we go. All right, we talked about CoreWeave yesterday. CoreWeave is also in that data center play, and it's on sale. It's not on sale. Well, it's on sale more than most. Nvidia is a big investor. This is the number one company Nvidia is investing in. It's been forming a base as well. We've been trying to break out of this freaking base and break that trend line. If that happens, CoreWeave has so much room to the other side. When I show my receipt in 3 years, I don't want y'all complaining and telling me I ain't show y'all these 5 or 10 for companies. All right, so that's CoreWeave. It can also lose you a lot of money. You gotta be patient. GPCR. Guys, I knew about Structure Therapeutics a long time ago, and I held on, sold, and then this bad boy exploded to the upside without me. I held on, guys, I held on to this stock throughout all of this. This is one of the companies that can also go fall in a hole. There's a couple of companies that I was holding that can go fall in a hole. This is one. You can go fall in a hole somewhere. AMD was the other. These are companies that are on my shit list. And UNH, y'all can go all fall in a hole together. Because I tried to hold on with all of them. I tried it, guys. I tried my best. Look at how long I was in this joint. I had the news. I knew they were coming out with a pill version of that. If you're into GLP, is it GLP-1? GLP-1 drugs for weight loss. This company had a pill version. Just because you have the information doesn't mean the stock's gonna go up, Mr. Joel. Don't you teach that every night? Yes. The catalyst finally came in, and look at what happened. I missed it. I missed it from $15 to $95. I missed it. I can't believe missed it. Well, now it's falling in a hole. Go fall in a hole. If you're in it, congratulations. Congratulations. It's me, it's not you. It's me, but it can go fall in a hole. That's Structure Therapeutics. GPCR. All right, Roblox real quick. Roblox, my kids own a lot of this stock. It is now jumping off the 200-week moving average. In fact, I need to go let them know that maybe they should be adding to their positions because it's now at the yellow brick road. It's at the yellow brick road, and it looks like it's about to start going oversold on the relative strength index. It hasn't done it yet, but it's getting close to it. So I feel like this. Anybody that's not in it, whoever didn't want to be in this stock is probably out of it. Like, I don't think anybody is thinking about selling what they have now. So if we break this trend, guys, Roblox can really, really run. All right, so we are sitting at the yellow brick road. What's the other one? IBIT. What is that? The Bitcoin ETF? All right, so I like looking, I know this is IBIT and, you know, it's red. It's going to look like every other crypto. It's going to look like every other crypto chart. If I'm looking at crypto stock, guys, I always encourage you guys to buy BTCO. All right, the reason for that is because Bitcoin, BTCO, it follows Bitcoin a lot better because the numbers are the same. So like I'm looking up now and BTCO is $68 a share. That's like $68,000. Tomorrow it's gonna be at $77 a share. That's like 77,000 in the real Bitcoin. So I like following this one instead of the IBIT because it's also an ETF, but this is one of the largest ones, if not the largest cryptocurrency ETF that's out there. So I don't want to, the person that recommended IBIT, I don't want to, shit on your stock. I'm just saying their charts are going to look the same. So what you see over there is what you see here. But for number purposes, you can always tell where Bitcoin is just by looking at the price and adding, 3 zeros. $68, 68,000. $77, 77,000 bucks. All right, it's gonna follow it very, very closely. I love Bitcoin, guys, because it got cut in half. Anytime you can get crypto cut in half, 50% off, I'm gonna always love a 50% cut. Cryptocurrency drops 50% every single year. If you didn't know it, you need to learn how to look at a chart. SoFi, this is one of my favorite fintech banks, fintech companies. I own a lot of this. Okay. And I want y'all to see something here. It is going oversold on the relative strength index. Guys, when stocks go oversold on the relative strength index and you get close to that yellow brick road, you are almost guaranteed funds 1 year later, especially if that yellow brick road is angled up. If you're add this to your portfolio right here, right now, it can drop to $11 a share, even $10 a share. There is 50% downside. But if this bad boy goes back to its highs, you're talking about making 100% return. So you can risk 50% to make 100%. A lot of Wall Street managers are going to take that risk. They do consider this a higher, riskier play, but SoFi is becoming a player in the banking space. In fact, SoFi they just had something at SoFi Stadium. What did they just have at SoFi Stadium? Was it the championship? No, I don't think it was. But whatever the case, SoFi Stadium, there's a lot of, they're doing big things as far as banking. They do student loans. Guys, you can go on SoFi right now. You can buy crypto. You can do, they're going to have trading on the platform soon. Like SoFi is like in my opinion, a more legitimate Robinhood, in my opinion. All right, so guys, buy SoFi. Add this to your portfolio. It is speculative. It can drop 50%, so be careful. This is the last one, and I got to get out of here. KDK. What is this? Kodiak? Kodiak AI? I don't, looks kind of nasty, but I don't know what they do. We'll have to check out what they do tomorrow. I'm gonna look at the 200-day moving average. Yeah, y'all, I can already tell. I don't mess with companies with 200-day moving averages angled down. Y'all know how I feel about this. I do not mess with companies with a 200-day moving average angled down, because that means that literally in seconds tells me Wall Street is not interested. They're not interested. If I buy this, I gotta ask myself, am I willing to not make money for like 6 months? It could go lower. Am I willing to hold out for the big move? So I'm gonna have to do research on it. If I'm gonna buy something with a downward facing 200-day moving average, and see, it doesn't have, now it did really well in the beginning from 2024. It went from 1050 to 1150. I don't know. I don't even know the market cap. I don't know. I would have to do some research on this one. But for now, I would say stay away until you break through this trend. If you can break this trend and if you can break this trend and stay on this side for 1, 2, 3, candles, then you can go ahead and take that trade. If you know of a catalyst that can make this stock go up, like a takeover candidate, that's a different story. I don't know what your strategy is, but as a investment, I don't know yet. I have to read up on it. The charts are telling me stay away or wait until you break this particular trend. All right. All right, guys, I got to get out of here. I want to give a shout out to Mrs. Treetop. No, G7, the one and only, coming in at number 1. You got Mrs. Treetop coming in at number 2. Shaq Bully, Caffrey, Undercover Organizer, Alfred, Millionaire Challenge is me, guys. If you follow that Millionaire Challenge page, thank you, D Chrome, for that hand heart. You got Charter We coming in at number 8, Zono 106, Kale coming in at number 10, and coming in honorable mention is Sean Sorrell. All right, thank you for the Heart Me. If you guys haven't grabbed that Heart Me, go ahead and grab that Heart Me now. I'm gonna put on one song. I'm gonna let you guys engage with each other in the comment section. This always goes from a educational period to engagement at the end of the session. Make sure that you guys engage with like-minded individuals like yourself. There's a lot of educated people in this room. There's a lot of teachers that are in this room, that are in this particular community, because we want this to be the best educational room on TikTok. So I'm going to put on a song. As soon as that song is over, I will see you guys tomorrow. And it looks like my Spotify wants to play. It's the second Tears for Fears song, so we just gonna listen to Tears for Fears.